Hello and welcome. I'm Blair Blackwell, and this is the Daily Market Brief. Let's catch up on what's moving in markets today. Good morning. It's Thursday, 13 November. London open. Three things shaping the day. Washington has ended its record shutdown. The yen stays soft as Bank of Japan uncertainty lingers. And strong Australian jobs figures are lifting the Aussie while investors wait for UK growth data. In the United States, the government is reopening after a 43-day shutdown, with the funding bill signed overnight. The dollar is a touch firmer. And Asia stocks mostly edged up after the news, with the Dow closing above 48,000 stateside. Markets also got a more cautious tone from Federal Reserve officials, with Boston Fed President Susan Collins signaling a high bar for any further rate cuts soon. That mix of reopened government but still foggy data flow has kept gold supported, pushing to a 3-week high as traders weigh what the Fed does next with incomplete information. And Japan. The yen remains weak, near a 9-month low against the dollar, as questions around the Bank of Japan's path persist. Governor Ueda told Parliament underlying inflation is gradually moving toward target, and reiterated the bank stands ready to respond if long-term yields move out of line, including more bond buying. Wholesale prices rose more than expected in October, yet currency traders are focused on the risk that authorities step in if dollar-yen climbs too quickly toward the mid-150s. Australia delivered the data beat of the day. A strong labour market report lifted the Australian dollar and pushed AUD against the yen back to its yearly high, even as local equities slipped. The figures reduce hopes of near-term rate cuts from the Reserve Bank and keep the focus on inflation. Closer to home, the UK's third-quarter growth reading is due and expected to show modest expansion, hinting that momentum may be stalling. In the background, European policy debates continue, from a splintering front on the European Union's long-term budget to an International Monetary Fund warning that some countries may need to rethink parts of their welfare systems to stabilize debt. Those are medium-term themes for bond markets. On commodities, oil has edged higher as the U.S. reopens, while corporate news has Total Energies reportedly weighing sales of wind and solar assets in parts of Asia to trim debt. A reminder that capital discipline remains in focus across energy. In emerging markets, the Indian rupee is softer on foreign outflows and growing bets that the central bank could turn more dovish after soft inflation. And in China, one bank's out-of-consensus call sees exports staying surprisingly strong into next year, a backdrop that would support Asian currencies and commodity demand if it materializes. Turning to market and sector focus, the end of the shutdown is mildly supportive for risk sentiment and gives the dollar a bid. But lingering data gaps and a cautious Fed keep a floor under gold. The yen remains pressured by Japan's ultra-easy settings, while the Australian dollar has cyclical momentum behind it after the job surprise. Oil is firmer, helped by improved risk tone and the prospect of normalizing U.S. activity. Looking ahead, the calendar centers on the UK GDP release. The White House says delayed U.S. data for September will now be published with the reopening. So watch for updates trickling back onto the tape and for any additional Fed communication into December. What I'll be watching today: dollar-yen for signs the uptrend persists and whether talk of official support for the yen reemerges if it pushes higher. I'll be watching the Aussie against the US dollar for an uptrend as strong employment keeps the Reserve Bank cautious about easing. Sterling against the dollar around the UK GDP print, where a soft surprise could cap recent gains. Gold for follow-through on the break to a 3-week high, with uncertainty around U.S. data keeping dips shallow. And in emerging markets, dollar-rupee for a gentle uptrend if outflows continue. The takeaway: the reopening in Washington clears one cloud, but with policy cautious and data still catching up, the mood is constructive yet careful. That's it for today's edition of the Daily Market Brief. Thanks for listening. I'm Blair Blackwell. This podcast is for informational purposes only and does not constitute financial advice, trading recommendations, or investment guidance.